Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I just want to start with an apology about the sound quality of the last two videos. I wasn't sure what was happening. I did check my microphone. It seemed to be working fine, but it was only when after the editing and the uploading and all the other bits and pieces, something happened in between. So I decided to change my microphone. So now I've got a brand new microphone. So I hope the sound quality improves and back to its normal best. Okay, so coming back to today's video, I want to just highlight a number of charts to show confluence that we are coming very close to the end of this bear market and the beginning of the next bull market. And the title of this video is that there is a warning to those people who are waiting on the sidelines, because the next move will shock everyone if the charts are to be believed. So let's get into that. And if that sounds interesting, then grab a cup of tea, sit yourself down, eyes on the screen, and let's open the Bitcoin vault to get in the mood for Bitcoin. Okay, before I get into the charts, the usual polite reminder, please remember that all my videos are just giving my perspective on what's happening in the charts. So please do your due diligence and the wider research before you make any important investment decisions. So with that out of the way, let's get straight into the title of the video, why the next move will shock you. This is the chart on the daily time frame, which I've been showing you for many weeks now. And as you know, we've been following this fractal from 2018 when we topped out at 20,000 here, and we've been following this white line here, which is the 50 simple moving average. Similarly, this is what happened here at 69,000, and we've been following the white line here since then. So for the purposes of not repeating myself, if I just take it from this point here where we broke down below the 50 simple moving average, equivalent to this over here, as you can see, we've been following this pattern up to here. So what is it doing now? Where are we? And what is about to happen? So if I move this chart to the left, you'll see exactly what's happening. If we have a look at this point here where we broke above the 50 simple moving average back in 2018 and compare it with what's happening here currently, so you can see quite clearly here that back in 2018, when we first made contact with the 50 simple moving average, we went above it and then came back, got rejected here. Similarly here, above it and then got rejected over here. Then we made another attempt, just like this, back in 2018. After the rejection from there, just like we've just had over here, and if you've been following my channel, you'll know that this is exactly how it's been playing, and we still haven't broken this fractal at all. It's playing virtually candle by candle. And as I showed you at the time when we broke up above the 50 simple moving average, similar to this candle here, back in 2018 on the 18th of February, look what happened afterwards. And remember, this is the daily chart. We've got around about 10 candles here, and this is what happened after we finally managed to get above the 50 simple moving average here. This was the start of the first part of the bull market, which went all the way up to 14,000 here. And as you've probably noticed, the price never touched the 50 simple moving average until we topped out at that 14,000, and it came back down to these levels here at around about 9,900 then. So if that chart is to be believed, the 50 simple moving average is currently at around about 19,600. So if we carry on following the fractal pattern, we're unlikely to go below this 19,600. So what other charts are showing this to provide confluence that we are about to have a big massive move to the upside? The next chart I want to have a look at is the pi cycle chart, and these two moving averages are the 111 daily simple moving average and the 350 simple moving average. Now, one of my regrets was that we know from historical data that when the 111 daily simple moving average crosses the 350 daily moving average here, that is where the normal top is. And this was back in 2017. And this is what similarly happened back in 2014. When the red line, the 111, crossed above the green line, the 350, that's where the cycle top was. And that was similar to what had happened before as well, over here. So we know that these two lines, the pi cycle, is very well respected by the Bitcoin charts. And if you have a look at what happened in 2018, once we had topped at 20,000, we fell below it and found resistance all along this line here, the red line. And just like the 50 simple moving average, once we fell below it, we were coming to the bottom of the market here. And this is what happened after, when we came up to that red line once again at the bottom of the bear market at that point. What followed was this: a big massive move to the upside to our $14,000 mark here. So what's happening currently with this red line? So similarly to 2018, once we topped out here, we found resistance on this line, but once we fell below it towards our bear market bottom over here, that's what we believe that's the case. We're just now coming back and retesting that red line now. Is that going to be the first sign of a imminent move to the upside here? Okay, so the next chart I want to show you is the monthly chart. And back in 2013, after topping out over here, we went into this bear market, created a structure here at the bottom of the bear market, and the stochastic RSI was basically down here below the 20, which is the dotted line over here. But once we crossed above the 20 on this stochastic RSI, we had fireworks to the upside. Similarly, at the end of 2017, when we topped out at 20,000, we came down in the bear market, created this structure here, resembling this structure here in the stochastic RSI below the 20. But once we came up to the 20 here, there was fireworks up to the 14,000 here. And then once we had a mini bear market over here down to the COVID situation, we went to the races there. So what's happening now? Let's have a look. We topped out here at 69,000, came down in this bear market. That's reflected in the stochastic RSI over here. And we're now creating this structure below the 20 as per the two previous cycles, just like over here in the price action. So what we're waiting for is that we're getting this flat lining here below the 20, just like here. And we're waiting for this little move to the upside towards the 20. And this is where the big next move is going to be coming. That could be this month or next month, but we know that this is what we're waiting for now, to the upside. If we have a look at the monthly chart with this price action here, and I showed you in the last video that we've had a monthly close above this neckline here. So if we take it from the previous cycle high at 20,000, we were making this neckline over here. And as I showed you before, when we topped out, that there is this thing that happens to all charts, which is called fading, that when we come to a double top, the market just fades above the previous high on a double top over here before making a big move to the downside. And this is similar to what's happening now. We had 3 monthly closes at around the $20,000 mark here, broke down on this candle back in September, and we've now come back and closed above with this candle here above the neckline. That is a very bullish development in chart analysis here. And as I've shown you with the other charts, we can expect a big move to the upside due to the development that's just happened over here. Another interesting development on the daily chart here with the 8 EMA, the 8 exponential moving average, the blue line over here. We've just recently had 10 daily closes above the 8 EMA for the first time here. And as you can see, we've just closed below it and now making our way back above it again. But that was the first time we've had 10 daily closes since back in March of this year. So as you can see, these are tentative signs that Bitcoin is trying to recover to the upside. And we need to just recognize these signs within the charts, which everybody else is going to be missing, that the market is about to move to the upside here. And if we go over to the weekly chart over here, you can see a very similar development from the end of the bear market in 2018 and the beginning of the next bull market over here. And I've shown you that by this curve, that a similar curve seems to be developing over here. So we've come to the end of the bear market over here, and slowly but surely we're going to be rising on this blue curve line here, just like we did back in 2018. So is this the beginning of the next bull market? And it may well be that it's the beginning of the next big move to the upside coming up imminently. Finally, I'm going to show you this chart, which is dividing the chart into the halvings. Someone mentioned to me that I haven't shown the halvings for a long time. Well, let's have a look at this, and it gives a very important picture of what we can expect at the next halving. So these pink vertical lines are the halvings that we've had, and this one here is the next halving around about March 2024. And if we have a look at from the bottom of the bear markets of what happened to the price up to the halvings, you can see that today's prices offer an amazing opportunity to get in with a view to a very big potential profit. The first halving here was back in November 2012, and if we take this bottom point over here, then from the bottom here to the point of the halving, at that point there, the market went up by 500%. But you can say that was a one-off because the market was just new at the time. But if we take the second point, at the second halving, which was around July 2016, if we have a closer look, that'll be better. So this was the bottom of the bear market here in 2014. So if you take it from the bottom of this point here to the point of the halving over here, the market increased from the bottom of the bear market to the point of the halving by 300%. At the end of the last cycle, at the end of the bear market in 2018, when we bottomed out here at 3,100 to the point of the halving here, we increased by 200%. But you'll notice that we went up much further than that in between the 2 points at 14,000, and that was an increase of around about 350%. So what can we expect at the next halving? Well, interestingly, you may have noticed that there are these strong trend lines which are going back all the way back to 2010 here, as you can see with this trend line at the top and this trend line at the bottom going back all the way back there in 2010. And if we were to follow this trend line up to the point of the halving here in March 2024, and if we assume that the 17,500 was the bottom for this bear market over here, then just to that point at that trend line at the halving would represent about 181%. So on an 18-month view, having a core holding anywhere around these levels would be paying handsomely at this point by the halving here. And that's not to take into account that we may move much higher than that in between. And that point there would bring the market price to around about the $50,000 mark, which would make sense as that would bring it up to this level here, where there's a lot of confluence. And really the rest is up to you how you want to interpret that and how you want to process this information that I've provided for you today. Okay, so we'll leave it there for today. I hope you found value in this, and I just hope this microphone is working and the quality of the sound is okay. And if you did find value in the video, then please do remember to like and subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.